Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the markets analysts here at HFM, and I'd like to welcome everybody to another live analysis session where we're going to be looking at a day which has been full of economic releases. Today, we've got the release of the Purchasing Managers Index, which is basically one of the very few indicators which are not lagging indicators, because there's a lot of indicators in the market. Most technical analysis indicators are lagging indicators. Fundamental indicators and actual economic releases within the market, again, a lot of the time are lagging indicators as well. So, for example, if we're looking at the NFP data, the employment statistics, for example, of course, that is one of the last things which is going to change if, for example, we're going to see an economic downturn, contraction, or recession. It is considered to be something which is lagging. The Purchasing Managers Index, so basically the PMI reports, is one of the very few indicators where it's actually considered to be not a lagging indicator, but a forward indicator. It's one of the first indications that we do get within the financial markets. So, well, that's one of the those are the one of the releases which we have received and seen throughout the day. The question now, ladies and gentlemen, is we've still got the US release, which is about to be released. That's going to happen in approximately an hour and a half, approximately. The question is if that's going to be expectation, if it's going to be weaker than previously expected. That, of course, is going to be the most important announcement. So far, we've had for the European Union, for France, for Germany, for the UK. But the main event, the main release, of course, is going to be the release from the US. And one of the assets which we're going to be looking at, ladies and gentlemen, is, of course, gold. We're going to be looking at gold. We're going to be looking at the US dollar. For example, here we're looking at the US dollar against the Japanese yen. We're going to be looking at indices as well. And what we're going to do is we're going to look at what has been released, what is expected to be released throughout the rest of the day and also throughout the week. And we're also going to look at potential trade setups, indications within the market, potentially how the market may develop, generally speaking. So that's what we're going to be looking at throughout the day. But, ladies and gentlemen, something else I also would like everybody to know is that we're going to be looking at, generally speaking, what's going to happen throughout the week as well. Even though we've got super important announcements today, we are going to be looking at what else is going to be announced in the week as well. And if you have any questions, ladies and gentlemen, of course, feel free to ask as many questions as you like. Now, the first asset which I'm going to look at is going to be the US dollar against the Japanese yen. Now, what's the reason for that? Because the weakest performing currency of the day, ladies and gentlemen, is actually the Japanese yen. Now, the US dollar isn't the worst performing or the best performing currency in the day. It's more or less unchanged. If we're looking at the price open of the day compared to the current price, the US dollar index is more or less unchanged. The best performing currency of the day is the Australian dollar. So, of course, if individuals want to speculate one currency which is performing poorly against the currency which is performing very well for the day, they can also take into consideration the US dollar against the Japanese yen. So, for example, here we got the US dollar against, here we got the Australian dollar against the Japanese yen. This is a currency. If I put my day separators here, so you can see very clearly how the performance has been today. So here you can see, for example, today, as soon as the market opened today, firstly, we opened on a slightly higher price gap. At one point, it increased by almost 0.70% so far, just so far today. But the first I'm going to look at is the US dollar against Japanese yen. This is also one of our most traded currency pairs as well. But what has been released so far? So let's go to our website. If we go to HFM, like so, here we can see HFM. If you go to Tools and Education, here on our right-hand side, we have the economic calendar. So if you click on the economic calendar, we have an very, very well put together economic calendar. It has economic events from the whole of the world, including from the European Union, from Latin America. But what that does mean is that we have a lot of events every single day. So, for example, this is just today, ladies and gentlemen. Look at the amount of events that we have had today. So, what would be better is if you just limit it to today and then just click on the countries that you want it to take into consideration. So, for example, today we've got the UK releasing events, the US releasing events. We definitely have Germany, the European Union, and we have France as well. France is here. There we go. Now, I'm going to filter that out so we're only getting those announcements. Now, we can see, for example, here we have the French announcements. The French announcement was more or less mixed. We had two announcements which was positive. We had one announcement which was slightly negative. But it was mainly mixed with a slight, should we say, bias towards it being a positive announcement. The German announcement, though, was definitely mixed because we have services PMI was significantly lower than expected, lower than the previous month as well. Now, even though the manufacturing data was better than expected, so here you can see it increased from the previous month and it was better than expected by 5 points. Nonetheless, it is still below 50. So we had one positive and negative piece of information, but both of them are very close to being below 50. One is below 50, the other one's close to being below 50. If both are below 50, so for example, the way it is in France, then that means there's a much higher chance, ladies and gentlemen, that there will be economic contraction in France and in Germany as well. In France, it's already an indication. But if we're also going to get a similar indication from Germany as well, that's the European Union's two largest economies at risk of being in a recession. So that's something that could definitely be negative for the euro. And then, ladies and gentlemen, we've got for the UK. For the UK, the real negative is the manufacturing PMI. That is super, super low, ladies and gentlemen. That is extremely low, 44.6. That is definitely in an area which is indicating economic decline. The only positive for the UK, ladies and gentlemen, is that the services PMI came in higher than expected and higher than the previous month. If that came in lower than 50, then there will be a lot of panic for the UK, a lot of panic for the UK. So they were saved by the services PMI because the UK economy is massively driven by services. Whereas if we're looking at Germany, for example, and even France to a higher extent compared to the UK, but to a lower extent compared to Germany, is also the manufacturing industry is also very important. For the UK, it's not important at all. It's massively, massively driven by services. So the fact that that's negative isn't as important compared to the fact that services PMI data came in better than expected. So if we're looking at the performance of the day in the currency market, the best performing currency, like I said, is the Australian dollar. The second best performing, ladies and gentlemen, is the UK, the British pound, the Great British Pound, the GBP. For example, one of the currency pairs we definitely will be looking at and analyzing is the British pound against the US dollar, known as the cable. The reason why that's one of the better performing currencies of the day. Now, I will stress that it's not significantly massively increasing in value. If you're looking at the British pound index, not the British pound, but the pound index, it's only trading 0.16% higher. Nonetheless, though, it's the second best performing currency of the day. The reason being is because the market isn't looking massively at the manufacturing industry, but more at the services PMI. That services PMI, ladies and gentlemen, came in significantly higher than previously expected. Significantly higher than previously expected. And what people can also do, ladies and gentlemen, is they can click on the announcement itself and you can see past data as well. So like I said, today it came in at 53.2. Look at the performance over the past few months. This is going all the way back to November of last year. Well, it's actually October of last year. And ladies and gentlemen, it's never been as high as 53.2. So that is significantly higher. So that's definitely something which is positive for the British pound. The reason why the US dollar index isn't seeing a lot of volatility at the moment, it was performing quite poorly earlier on today. At the moment, it's recovered, it's more or less at the break-even level. But then the reason why it hasn't been released so far is because the announcement for the US isn't going to be until another 1 hour and 15 minutes. So we've got 1 hour and 15 minutes to prepare for the announcement itself. Now, that's going to have a lot of effect on gold, of course, on gold. Of course, it will have a lot of effect on the US dollar main currency pairs, major currencies, and also US indices as well. So this is what we're going to be looking at, how we can influence those markets. At the moment, it's expected that both of them will be in the expansionary region. Whereas if we came in slightly lower, we'll be very close to actual stagnation, because if you're at 50, the index comes in at 50, or even slightly above, slightly below 50, that's indicating stagnation, economic stagnation. If it's going to come in lower, it's economic decline. If it's going to come in higher, then we're looking at an expansionary scenario, which is positive for the US dollar, negative for gold, and also positive for the stock market as well, because the stock market really needs positive economic data, even though ideally a lot of investors and traders would like to see that we've got weaker data that's going to trigger, should we say, a lower interest rate going forward. So more frequent and stronger interest rate cuts. Yes, I do want to see that, but at the moment, the main concern is not interest rates, but rather the state of the economy, especially as we're about to get the trade policy from April the 2nd significantly changed. Now, ladies and gentlemen, let's start off with the US dollar against Japanese yen. Now, if we're looking at the US dollar against Japanese yen, we're still at the moment currently trading above our 75 bar exponential moving average. The 75 bar exponential moving average is a very well known trend line, particularly on the 2 hour time frame. On other time frames, that needs to be slightly changed. Then we've got a sentiment indicator. This is an indication of the sentiment towards the price. This is a 100 bar simple moving average. So we've got an EMA and an SMA as well. If we've got some more advanced traders, ladies and gentlemen, you may also want to take into consideration the volume weighted average price, but only of the day's trading. That's also something more experienced traders may wish to take into consideration. They can also look at delta statistics, cumulative delta, and other indicators which are slightly more, should we say, advanced, but very useful. So we're above both moving averages. That's an indication that there is a slight bias that the price will increase in value, that buyers are trying to gain control of the overall price. The only concern, ladies and gentlemen, is that we're very close to two resistant levels. We have definitely a resistant level here, and you can see we found resistance here, we found resistance here. In this area here, again, we found resistance, and there's also a resistant level at the current level as well. So you can see we found resistance here, and also in other areas earlier on within the year, back in February. So that is a concern. We are close to that level. And we also need to take into consideration the best performing, even though, the Japanese yen is the worst performing currency of the day. Yes, okay. But the best performing currency of the year so far, most of the time, has been the Japanese yen. At the moment, it's the second best performing, only because the euro had that amazing week of a lot of upward price movement. Other than that, most people are looking at the Japanese yen being the best performing. Inflation on Friday came in significantly higher than expected for Japan. It's the only central bank, ladies and gentlemen, globally, which is expected in 2025 to increase interest rates. And they're not only going to increase interest rates, but they're expected to increase it on a further two occasions. That's also something which is very important. So the question is, is the safe haven currency, as it's known, the fact that they're looking at a more hawkish central bank compared to the rest of the world, if the Federal Reserve is going to be pressured by Trump into taking into consideration an interest rate cut, particularly if we're going to see a decline in economic activity because of the new trade policy that's going to be introduced on April 2nd, ladies and gentlemen. April 2nd is going to be extremely important. Now, if we're looking at April 2nd, ladies and gentlemen, April 2nd is on Wednesday. In my opinion, though, because people will price in the market before that even happens. Friday, Monday, and even Tuesday, expect a lot of volatility in those 3 days, as well as the 2nd of April, is going to be detrimental for the stock market. Detrimental because trade policies has a massive effect on the stock market, even more than gold, oil, currencies as well. So we have indications here, ladies and gentlemen, that the price is being controlled by buyers. They're trying to push the price higher. If you're looking at previous highs, ladies and gentlemen, it tends to go here. We can see it moved it moved up 0.90% above the trend line. If we look at the previous high as well, we're looking at it increasing 1.81% higher than the trend line before losing momentum. At the moment, ladies and gentlemen, we're currently 0.53% away. So we're not quite high enough if we're looking at price action compared to the price mean to indicate that the price is overbought. If we're looking at the main resistant level on our RSI, this is the main resistant level here. If we're going to look at an average, maybe slightly lower, maybe. Again, though, we're not close to that level just yet. We still got quite a while until we get to that level. Currently at 61. Here it's almost at 64 and a half. So we're still a way away. So we don't yet have indications, ladies and gentlemen, that the price is overbought. There is a possibility that the US dollar is going to keep on gaining momentum, even if it's going to be at least to that resistant level. Because the resistant level, ladies and gentlemen, that's 0.23% away. For short-term traders, somebody that's going to look at trading the announcement, so just entering, keep it in the market for a few seconds, few minutes, and then exiting, 0.23% is more than enough price movement, a lot of volatility to take into consideration. Because CFDs, a lot of the time, people want to be in and out very quickly of the market. So that's more than enough price movement until we get to that resistant level. But it's all going to be dependent on what's going to be released. Like I said, we're expecting both the manufacturing and services PMI for the US to be just above 51 level. For the manufacturing, 51.9, for services, 51.2. So if that comes in, both come in better than expected, there is a stronger possibility that these buy signals will really start to materialize. And if they do start to materialize, then of course we can take into consideration all these different levels. Now, what traders can do is they can switch over to a smaller time frame, for example. So if we go to, for example, a 3-minute time frame, which is a very popular time frame for short-term traders, we could be looking at, for example, this breakout level as a very first. So that breakout level could be something that traders want to take into consideration. And they may look to aim for entering in the scaling approach, for example. So they may look to scale in, for example. So they may enter here and then enter again here at 0.05% higher, for example. So they may look not to open one large trade at one price, but to open multiple smaller trades at multiple prices. So we have maybe one trade there, second trade there, then a third trade here, for example. So you're splitting the risk across different trades and different entry points. So, for example, if we're going to see something which we don't want to see, if we see like the price go out to here and then decline and it's going to hit our stop loss, for example, then we don't have, for example, 0.30 lot trade and it's going to be a significantly higher loss. But we've only got 0.10%, 0.10 lots, and this was never triggered. This was never triggered. So we've significantly a much better scenario, much better scenario. And that's the difference, ladies and gentlemen, sometimes from being in a margin call, from being stopped out. This is something extremely important. But this is something where traders, again, like I said, may take into consideration. And then may look at maybe multiple exit areas, or maybe take into consideration just one exit, for example. We said the previous resistance level was at 0.23. We can put it here at 0.20. So that's where we're aiming for, ladies and gentlemen. Let's change the color here. So let's make it blue. That's what we're aiming for. So even though we're entering multiple trades, we're aiming for them all to come in at this level here. Alternatively, some traders, they may want the first trade to aim for there, the second trade to aim for that same target, but then to have the third trade aim for slightly higher. This is what is known not only as scaling in, but also scaling out. So people have an option. They can look to scale in and exit all trades at the same area, or alternatively, they can look to scale out. Now, we're prepared for free trades here, for example. Okay, we're prepared for free trades. Here we've got 2 exits. We've got 3 entry areas. The first 2 trades we're going to exit at the first exit. The second trade we're going to exit at a larger, higher price, because we want to try and earn slightly higher amounts on that level. But I'm prepared for an alternative as well. So, for example, I may say, if the price is going to drop, let's say dark blue line here. There we go. It's like a grayish blue, for example. Here, ladies and gentlemen, if the price is going to drop below this level, okay, because there has been some strength with the Japanese yen. A lot of strength with the Japanese yen. Over the past week, it's weakened, but in 2025, one of the best performing currencies. The only one which is maybe in competition, like I said, is the euro. Other than that, the Japanese yen is flying, ladies and gentlemen. If it's going to drop below here, then I'm not going to open a buy trade. I'm going to open a sell trade. Or if it goes up and triggers some of these, but then declines, that's potentially somewhere where I'm going to take into consideration my stop loss. And then not only is a stop loss, but I'll sell and speculate downwards there. For example, this is what is known as a pivot in the market. It's in a pivot in opinion and in terms of speculation, because you're saying this is how much momentum I want in order for me to start to take into consideration an alternative direction. And we could look at the same scenario, ladies and gentlemen. So, for example, one trade there, and then the second trade 0.05% lower. So that's there. So I'm going to open a second trade here. And then target, ladies and gentlemen, where am I going to target? Maybe I'll target down here, for example. This is just an example, ladies and gentlemen. So I may target down here. So the lowest price of the day, for example. If I do want to take into consideration the lowest price of the day, I'm going to bring that slightly lower. I'm going to bring it to here, actually. I won't take into consideration the day's open. So price movement since then, I'm going to look at the low of the day, which is there. So I'm prepared for all scenarios, ladies and gentlemen. You can see I'm not just looking at the market and opening a trade as I feel like it, or looking at impulsive trading decisions. I'm fully prepared, and I'm prepared for 5 trades ahead. So the first one hasn't even been triggered yet, and I'm looking at potentially what's going to be the 5th trade that I'm going to open. Potentially, I won't open 5 trades. Maybe I'm just going to open 3. I'm 100% happy with that. Potentially, though, I'm going to open 5 because I need to be prepared. Because this trade here may be triggered. This trade here may be triggered as well. And then if the market moves against me and it hits my stop loss, am I going to end the day on a loss? If it's going to continue maintaining downward momentum, I want to speculate and take advantage of that downward momentum. So I've earned on 2 trades and I've lost on 2 trades. So at least, today where the trades didn't go in my favor at first, I'm at a break even. I'm not at a loss. If, of course, it does maintain that downward momentum. So here you can see, I'm looking at a scenario where I'm prepared. Okay, and I'm happy no matter if it's going to go up or down, I'm prepared. Whereas a lot of the time, beginner traders, they put themselves in a situation where it has to go in this direction for me to be profitable, and they're fully exposed to that direction of the market. Here, ladies and gentlemen, I'm prepared no matter what happens. If it's going to move upwards and only maintain upward momentum, if it's going to move up and then down, so we're going to see maybe trade range bound conditions, then I'm prepared. If we're going to see downward momentum maintain and we're going to start to switch over to bearish buys, I'm prepared as well. So I'm prepared no matter what direction the market we're going to move and no matter what trading conditions we're going to look at, because you need to have that winning mentality. No matter where the price is going to move, I want to be profitable. Very worst, I want to be moving away with a very, very low loss, very low, which isn't going to affect negatively my account in any way, shape, or form, because I'm going to keep it controlled. Or worst case scenario, to be at the break even. If we're going to be on a bad day and a break even or small loss, I can stomach that, as long as we've got those days where I planned free trades and all those free trades are profitable. It's all about the success rate by the end of the day. So that's something we're going to keep on looking at, and we're going to be looking at that, ladies and gentlemen. Of course, the main price action and the main importance is going to be when the actual announcement is going to take place. The announcement is going to take place in 59 minutes. Now, today's session is going to last approximately 45 minutes. We're not going to be live on the actual announcement itself, but the important thing is for you to be prepared and know how to act when we're going to get that announcement. Now, let's switch to gold, ladies and gentlemen. Gold is actually one of the most traded assets within our platform, and also one of the most traded assets globally as well. So here we can see gold. There's a 2-hour time frame, and we can see we definitely had that dip on Thursday and Friday. 100% understandable that we had that dip. 100%. If you look on our website, ladies and gentlemen, I was actually writing about this. So if you go to HFM, go on to our website, go on to news and analysis. Here you go. Gold is up 14%, but has it peaked? So here we were looking at the fact that, yes, it's gone up 14%. And this was on the 21st, ladies and gentlemen. And not only the 21st, but the morning of the 21st. So we also had an article on Thursday as well. This is something very important because we're writing about it and analyzing it and giving you that information. And you can see on Thursday and Friday we spoke about it declining in the morning of both days, and you can see it declined on both days. It was understandable because we were at an extremely high price, ladies and gentlemen. So there was bound to be some profit taking. There was profit taking, a decline. How much did it decline by if we're looking at the peak and the lowest price? Almost 2%. A lot of volatility, so much volatility, more than 1.90%. But, ladies and gentlemen, we've gone back to that main area. There's a reason why we've got this trend line and price sentiment line here. There is a very strong reason for this, and you can see what that reason is. Okay, you can very clearly see what that reason is. Now, let's say, for example, again, we're going to be looking at two scenarios. There's a bearish bias, bullish bias at the moment. If you're looking at the trend lines, price movement is trying to break. If it does break above this level, then this is no longer a retracement. We're already starting to no longer look at a retracement because it's started to gain momentum, but it's still, we can't guarantee that just yet. It's 1.11% higher, so we're already starting to get indications that that's not a retracement down upwards and then it's going to move downwards. That's some real strong bullish momentum there. If it's going to increase above here, though, then that definitely no longer is a retracement. The only thing which is slightly indicating downward price movement is that we're still below the 48, the 50 on the RSI. I've got it on a period of 14. Personally, I a lot of the time have it on a period of 18, so we've got slightly more information being taken into consideration. Either way, though, we're not above 50 just yet. So that's the only negative side. Always, though, we're prepared. So, for example, if we're going to look at here, 65% momentum being regained downwards, then that's almost in line with our 75 bar exponential moving average. So if it starts to decline and we're going to drop below that level again, that's indicating there's enough downward momentum to say, wait a minute, yes, we saw a very strong upward price movement, but there's still downward momentum. So potentially let's start potentially speculating downward price movement, even though that in 2025 upward price movement has treated us extremely well. So if we are going to drop below there, that's 65% momentum of the retracement being regained. We've dropped below 75 again, ladies and gentlemen. So that's something we need to take into consideration, because 65% being regained below the trend line, we'll still be below the 50 on the RSI. The only thing is that we're not below the 100 bar SMA. Definitely, if we drop below there today, we'll be below the volume weighted average price as well. So that's an indication of downward price movement in the more short to medium term, because we're looking at a 2-hour time frame. If we're going to increase above here, ladies and gentlemen, then we've got indication of upward price movement, and that will be in line with also the 2-hour time frame. So let's look at the the 3-minute time frame. On all 3 minutes time frames, the 200 bar simple moving average is extremely important. You can see here, for example, it moved upwards, it declined, found support at that level, moved upwards, declined again, found support at that level. It's done so again, found support at this level. The only thing is now, ladies and gentlemen, is that potentially we've got a slight head and shoulder pattern. Even if we're not, ladies and gentlemen, you can see we're looking at a lower low, and we're attempting now to get a lower we've got a lower high and we're attempting to get a lower low, because the low, ladies and gentlemen, you can see there's a slight upward tilt, but if we're going to break below that, then we've got lower low again, ladies and gentlemen. Let's go to a 5-minute time frame for a moment so we can see the day's price movement. Let's have the period separators. We've got that on our screen. Let's zoom out slightly more. So you can see that 200 bar simple moving average is acting extremely well. Here where we were below, you can see it declined all the way out to here. Here where we were above, we increased all the way out to here. The question is if we're going to gain that downward momentum again. That's a very key question. So let's look at a setup though on the 3-minute time frame. Again, this is going to massively depend on what's going to be released today. Now, if we're going to get upward price movement, where we start wanting to take into consideration momentum upwards, we've got two options. We can either look at the bullish breakout. Alternatively, we can look at 65% momentum being regained. If you're not sure which of the two, you can trade both and smaller trades instead, or we can look at an average. An average, so basically the middle ground is here for those individuals who are not sure if they want the breakout or 65% momentum being regained. So that there, if we increase up to their indication of a buy, and because it's slightly more volatile, so instead of looking at 0.5% each time, we can look at, for example, 0.8. So 0.8, I'm going to open a second trade here, and then another 0.8. There we go. Look at a third trade here again, and so on and so forth. If we're going to decline below here, ladies and gentlemen, then of course we got that indication of downward price movement, 0.8 again, another indication of downward price movement. So you can see 5 potential trades. I'm prepared for both directions, ladies and gentlemen. I'm prepared for both directions. Also, it's important to be prepared. Why? Because, ladies and gentlemen, we're about to get major news announced. So this gold, the US dollar, is expected to see a lot a lot of volatility, volatility, ladies and gentlemen. Now let's go to actually the S&P 500, which is performing, generally speaking, very well today. Here we go. Got the S&P 500. Let's go at first onto a daily time frame. So we did see a lot of downward momentum. We saw downward momentum primarily, ladies and gentlemen, for two reasons. Not just because of trade wars, because of the Federal Reserve unexpectedly announced that they were going to take a more hawkish approach to 2025. People were expecting three interest rate cuts. They said it's more likely going to be two interest rate cuts, so people had to reprice the market. And then, of course, you had the trade wars, trade policy that's really going to gain momentum on next Tuesday on the 2nd of on the 2nd of February. That's going to be very, very key on the 2nd of February. 2nd of April. That's going to be detrimental. Upward momentum, though, massively today. We're starting to gain some uh, confidence. People buying the dip. People are hoping that the policy, which is going to be announced on uh, Tuesday, on the 2nd of April, that there's going to be some loopholes, that it's not going to be as harsh as previously expected, that Trump will allow for certain goods to continue to work as normal, rather than being like for like tariffs on the whole of the market itself. So that's something which could significantly change the view on the trade policy. So that's something which is really starting, especially over the past 24 hours, to build momentum. So, for example, if we're looking at the price close on Friday to the price open, just the gap itself was almost 0.5%. At the moment, we're almost 1.20% higher. 1.20% higher. That's quite a lot, ladies and gentlemen. So we can definitely see, bullish momentum. 2 hour time frame, we're starting again for the first time in a long time to really get indications of upward price movement. So that's something for us to take into consideration. We don't have divergence on the RSI. We've got clear upward convergence there, upward convergence here as well. So we've got no indication pointing towards the prices yet overbought. What I will say that you can take into consideration is you can look at the S&P 500 components. Because what a lot of people would do is they say, if I'm speculating about price movement, I want 70% of the components to be increasing in value. So, for example, what can you look at for 70%? You're going to look at 70% of the whole of S&P 500. Most people would just look at the most influential stocks. So, any stock which is 0.5% and above. So, for example, 0.5% and above, how many stocks are increasing in value? So if you're looking at 0.5% and above, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Only 15%. Only 15 out of 30. So that's 50%, ladies and gentlemen. So there's a lot of upward price movement. But what I will say is only 15% of the most influential stocks 50% of the most influential stocks are increasing in value. That casts some doubt. The only positive that I will say is if you're going to look at the top 10 most influential stocks, then 80% are increasing in value. So that's a positive. That's definitely a positive. And also, especially Tesla, very strong gains. Apple, which is the most influential stock, again, very, very strong gains. Whereas the declines here are more moderate compared to 5% up, almost 2% up. That's a lot more moderate than, for example, 0.70%. There, ladies and gentlemen, here you can look at it. Like I said, you can look at it in two ways. Top 10 most influential and impactful stocks, 80% are increasing, and the main volatility is for the increase in stocks. But if we're looking at any stock that owns 0.5% and above, then it's 50-50. So it's down to you how you're going to view that. it does definitely indicate that there is some risk that it could correct and retrace downwards, especially taking into consideration we've now got 1, 2, 3, 4, 5, 6, 7 candlesticks where the price is increasing in value. And if we're going to look at the distance, ladies and gentlemen, for example, here the distance from the average to the low here, that's 1%. From the average to the low here, 1.39%. That's not enough to take into consideration. The average here, 1.33%. So it's similar to what we were looking at here, where it started to retrace back downwards. Just something for us to take into consideration. It doesn't necessarily mean it's guaranteed to be that scenario. We're just prepared for it, for example. So, for example, if we are going to see that downward momentum, maybe we've got to, here, for example, maybe slightly lower, maybe somewhere there. So we're saying, if we are going to decline and we're going to decline 0.13%, I'll open a first trade there speculating downward price movement. And then maybe, if it declines here below the 200 bar moving average, as it declines, this will continue to move upwards. So probably it'll be somewhere here. If it's going to decline below the 200 bar moving average, maybe I'll open a second trade there to indicate downward price movement. So we've prepared, there's upward price movement. The components gave a 50-50 scenario, really. So we're prepared that, even though we're getting an outward price movement, it's going to collapse again. Because there is risk there. There is risk there with the trade wars. It can really trigger a very low risk appetite in the market and low sentiment towards the stock market. So it is something we have to be prepared for. Let's look at the market overall, though, before we end today's session and before we go and look at, what's available to everybody. Now, if we're going to be looking at currencies, like I said, worst performing of the day is the Japanese yen. The best performing is the pound and the Swiss franc. The US dollar is more or less in the middle there, ladies and gentlemen, more or less unchanged. If you're looking at indices, most indices are trading higher. The only ones which aren't trading higher at the moment are European indices, which are slightly lower. It's not that they collapsed, for say. They're just slightly lower. If we're looking at metals, ladies and gentlemen, gold, silver, and copper are trading higher, whereas platinum is trading lower. If we're looking at crude oil is trading higher today as well, ladies and gentlemen. Now let's go to our website, because there's a couple of things I want people to be aware of. Now, if you look at our website, ladies and gentlemen, there's a few things for everybody to be aware of. The first thing, ladies and gentlemen, is that depending on your region, there is a CFD crypto account which is available to you. So, for example, if you have, ladies and gentlemen, very interested to trade very volatile assets such as cryptocurrencies, you can trade cryptocurrencies on CFD. There's a specific account for crypto CFD trading. And take into consideration, you have a leverage there of 1 to 1,000. And you can trade also on Saturday and Sundays and overnight as well. That's something for us to take into consideration. We have accounts, for example, where we have no minimum deposits. We have accounts with very, very low spreads as well. And we also have accounts with no overnight fees, no swap fees, basically. Also take into consideration, ladies and gentlemen, that we have local events for you in Latin America, all over Africa, all over Asia, across the whole world, ladies and gentlemen. We've got events continuously, seminars where you can come and meet us face to face and get face to face education. But even for those individuals that don't have time for that, there's education which is available online, ladies and gentlemen. So this is the webinars for this week. You can register for free. For example, we have a webinar on Wednesday about improving market timing and accuracy. On Thursday, we have a webinar for trading psychology and what to avoid. Because trading psychology and controlling emotions is one of the most important things about trading. So we have webinars that's available for you for free as well, ladies and gentlemen. And the last thing I want to point out is that every single day we have articles available on what's trending, providing forecasts, providing signals with fundamental analysis, technical analysis that is also available to you as well. So, ladies and gentlemen, that is it for today. Hopefully, you found today's session educational and informative. If you have any questions, feel free, of course, to get into contact with us at any time. In the meantime, though, trade safe, trade responsibly. If you need assistance, feel free to get into contact either with the support team or the analysis and education team. Of course, we'll be more than willing to assist you. In the meantime, though, enjoy the rest of your day and do not forget in exactly 40 minutes, the US will release their services and manufacturing PMIs. And we're about to see a lot of volatilities. And then we're, of course, going to look at all these setups that we've been looking at throughout the day so far. So that's it for today. Enjoy the rest of your day and goodbye.